Cloudflare is an extremely fast-growing stock that is changing the way the internet itself works. And they have recently released new earnings that I'm going to go through in detail to analyze how well they're doing and how it might affect the future stock price. Hey everyone, and welcome to FinTech. In this video, I'm going to go over Cloudflare's background as a company, look through their most recent earnings report, and finally offer my thoughts on what this means for the future of the company. With Cloudflare's revenue growing at 51% year over year while increasing their already high margins of 78%, it's no wonder that the stock price has nearly tripled since a year ago. But more recently, the stock price has actually been relatively flat throughout 2021. We'll look at why that might be and see if it is justified based on the earnings that they just released. One last thing, if you could please hit the like button, it really helps boost this video's engagement, which helps YouTube push this out to a wider audience. And you can always dislike and unsub at the end of the video if you really hate it. With that said, let's first dive into Cloudflare's backstory and how they grew into a now $21 billion company. Cloudflare's CEO is a guy named Matthew Prince, who is by all accounts a genius. He was a computer science undergrad turned lawyer at the University of Chicago, who later went on to found Cloudflare at Harvard Business School. His co-founder, Michelle Zatlyn, was a graduate of Canada's prestigious McGill University, who actually met Prince at Harvard Business School. Their last co-founder was Lee Holloway, a technical architecture wizard who helped build Cloudflare's first product. In fact, Lee Holloway was the chief software architect at Prince's previous company called Unspam Technologies, which they both left to later go and found Cloudflare. Cloudflare's origins start way back in 2007, when Matthew Prince and Michelle Zatlyn teamed up for Harvard's business plan competition with their idea for Project WeBull, a firewall for the web. They ended up winning the business plan competition, and soon after they moved out west to join Lee Holloway into building this idea into a real company. Since the beginning, Cloudflare has done a really good job of sticking to their roots and basically following the business plan that Prince and Zatlyn laid out in the beginning, putting security at the heart of everything they do. They wanted to build a better way of protecting websites, and they visualized themselves like an internet immune system. The same way an immune system can go out and determine what's a bad actor and what's a good actor in the body and then only attack the bad actors, they were able to do the same thing with Cloudflare. By analyzing the massive amounts of traffic that were flowing through the different websites that they hosted, they could use data analytics to determine who the bad actors were and prevent them from damaging anything. At the same time, they could then use these same analytics to determine who the good actors were and optimize the web experience for them. Their initial focus on blocking bad actors led them to develop DDoS protection tools. A DDoS attack is a distributed denial of service attack, basically where you get a whole bunch of traffic and push it all onto one website with the goal of crashing their servers. Cloudflare gained some pretty positive attention in 2013 when they helped mitigate the then largest DDoS attack in history. But just focusing on blocking bad actors would have made Cloudflare a cybersecurity company, and they wanted to be a lot more than that. In addition to their security offerings, Cloudflare realized that they could use their platform to also optimize the web experience for everybody else, making it more responsive, more performant, and safer all at the same time. They moved beyond pure security products like firewalls and security access management into performance products like intelligent routing and vendor-neutral load balancing. They offered these services using a pay-as-you-go model, making it really easy for developers to sign up on a small scale, try out the products, and then expand that to the rest of their company once they realized how good the products really were. Since then, they have launched product after product to continually make the web experience better, including edge computing, analytics, and Internet of Things services. I counted 36 separate products listed on their homepage today, each of which tightly integrates with each other, which makes it really easy for a customer of one product to move over to other products as well. This incredible pace of innovation is one of the reasons that Cloudflare has managed to grow so consistently at such a fast pace. But it's much easier to tell a good story than it is to back that story up with real numbers. So now let's look at their most recent Q1 2021 earnings report. In Q1, Cloudflare reported revenues of $138 million, up 51% year over year, and in line with the increases that they've seen their last few quarters of up 48%, 54%, and 50% year over year. This puts their growth rate since last quarter at 9.6%, which is very close to the 10% estimate that I provided in my last video, and substantially higher than the estimate that they provided in their last forecast. Although, to be fair, they usually provide very conservative guidance for the next quarter, and they even said in their last earnings call that they were being both prudent and conservative in making that estimate, so it's no surprise that they beat it by quite a bit. To put this incredible growth into perspective, while their revenue was $138 million this year, just 1 year ago they only had $91 million in revenue. And this rate of revenue growth, while extremely extremely high is nothing new for Cloudflare. They grew revenue 59% in 2017, 43% in 2018, 49% in 2019, leading into their most recent year of 50% growth. In Cloudflare's earnings presentation, they highlight this as one of their key metrics, showing that they've had a compound annual growth rate of 50% from fiscal year 16 through 20. And this growth rate has actually been even faster among their large customers, which they define as any customers who spend over $100,000 on Cloudflare each year. Those large customers have had a compound annual growth rate of 69% since 2017. And they now have 945 customers who spend over $100,000 every year on Cloudflare. Their non-GAAP gross margin stayed consistently high at 78% this year, and it has not dropped below 77% for the last 5 quarters. Their dollar-based net retention rate also increased for the 4th straight quarter, up from 119% to 123% in their most recent quarter. This means that for every customer who spends $1 this year, they can expect to upsell that customer to spend $1.23 next year. This is a really good indication that customers love Cloudflare's products, because once they get a taste, they just want to spend more and more on the platform. Cloudflare now has over 4.1 million customers across 180 countries across the world, with 99% of the developed world's internet within 100 milliseconds of Cloudflare's servers. This company is executing at scale just as effectively as they did when they were a smaller company. And the best part is, they still have a huge runway in front of them to grow. As we can see from their extremely strong dollar-based net retention rate, Cloudflare is really good at both holding on to existing customers and upselling them onto new products. In fact, in their investor presentation, Cloudflare called out their kind of unique go-to-market strategy. Rather than building a sales funnel where you put a ton of money into advertising to the entire world, and then slowly hope that a certain number of the people who see your ad use your product, they use an inverted sales funnel. Basically, developers find their tools by themselves by going to Cloudflare's website. They onboard themselves automatically, so it doesn't require any interaction with a sales team. And then once they start to expand the usage of that product into the rest of their company, then Cloudflare will reach out with their sales team and try to market them into making bigger sales to bigger clients. This allows Cloudflare to really focus their spending on customers who they know already like the tools and need to use them, and figure out what tools would help them the most, rather than just blasting it out to the entire world. And luckily for Cloudflare, there are still a lot of customers out there. Only 17% of the global 1,000 are currently paying customers of Cloudflare, so there's still a lot of space left to capture really large companies. Additionally, Cloudflare has more recently been focusing on international expansion outside of their native US. For the first time, 48% of Cloudflare's revenue came from international customers. This new market could potentially be huge for Cloudflare, especially in the future, because they work to make the web both more secure and more reliable. And as more people start to get onto the internet in greater and greater ways around the world, this will act like a rising tide that will help lift Cloudflare's boat. Looking now at Cloudflare's forecast for next quarter, they estimate the revenue will be between $145.5 million and $146.5 million. This would put their quarter-over-quarter growth rate at 5%, which would be a decline from what they saw for the last several quarters. Seeing as they pretty much always beat their estimates, I see this as being very conservative and an underestimate of how they're actually going to perform. So I'll be looking for them to grow at a growth rate of 10% quarter over quarter. This would put their actual revenue next quarter at $152 million. For the full year of 2021, they estimate that their revenue will be between $612 million and $616 million, which would put their year-over-year growth rate between 42 and 43%. Again, if they manage to beat their estimates by just a few percent each quarter, this would put their growth rate right in line with what we've seen for the last several years, between 49 and 51% year over year. I'm very confident that they are going to beat this, because with the company executing so well and no obvious headwinds in sight, I don't see any reason for the growth to slow down for quite a while. The only thing that I could see becoming a potential problem for this company would be if they saturate their total addressable market. And Prince actually addressed this directly in their investor presentation. While back in 2018, their market was basically restricted to CDNs, DDoS protection, and firewalls, they have expanded that hugely with their approach called Cloudflare One, which includes network services and zero trust capabilities. These include some of those new products that I mentioned earlier, including data analytics, data loss prevention, and VPNs. With this new area of focus, Cloudflare estimates their total addressable market is $72 billion today. But but that will grow into $100 billion by 2024. And that is without focusing on the new areas that Cloudflare is planning on moving into next, including serverless, 5G, Internet of Things, and more consumer-based products. Now, while that list that I just threw out might just sound like a basket of buzzwords, and Cloudflare is known for having pretty sleek marketing, Cloudflare has executed on their promises in the past. So I'm pretty inclined to take what Cloudflare says at face value, and when they say they're going to grow their total addressable market, I tend to believe them. So what do I think of their earnings overall? Well, while I've been talking in pretty positive terms throughout this entire video, I'm actually not blown away by these earnings. I don't think they're that spectacular, at least for Cloudflare. They definitely didn't disappoint and surprise to the downside, but they also didn't surprise hugely to the upside. They were really right what we expected them to be. While the stock is down from the pre-earnings highs that they had a couple weeks ago, I don't see any real reason for this except for people still rotating out of cloud stocks and more into recovery stocks. To me, these really just seem like macro movements, and they don't really have anything to do with the fundamental company, because while Cloudflare definitely experienced a lot of growth with the number of people moving to digital platforms and working from home, it's not like once people are able to go back to the office that these digital platforms are any less valuable. People are still going to be using them, and they're going to continue to grow every year. I have not added to my Cloudflare position, mostly because I don't have any cash on the sidelines to put into it, but if Cloudflare's stock price continues to decline, I may sell a little bit of one of my other positions to add to this stock. The nice thing about these really fast-growing companies whose stock price is basically trading sideways is every year that these companies grow 50% at the same stock price, they're effectively 50% cheaper. So let me know what you've personally done with Cloudflare. Don't forget to like and subscribe if you enjoyed the video, and I'll see you next time.